Welcome to Smart Investing with Philippe. This is again another good day. So I know you shouldn't be euphoric the same way you shouldn't panic when the market goes down, the same way you should not get excited too much when the market go up and up and up and up and up. But anyway, after the very tough time that we have been through, then it's natural that we feel relieved that we took the right decision not to panic sell and to DCA into this market crash. And then we are happy now that we are back to break even and probably also positive return for some of our investment. So let's get straight into the market update and see what happened today and the economic data and the headlines. Stay tuned. Start with the usual QQQ net breakout yesterday. You're above the 200 moving average, and that's a very critical technical level. You know, when the indexes actually do such a very rapid V-shaped recovery. I mean, those who are doubting that this is a V-shaped recovery, look again the shape of that recovery. Sharp drop and then sharp rise. This is definitely a V-shaped recovery and a fast one. Then you have actually a breakout above the 200 moving average, which was a very important resistance level. And now we are back above the 200 moving average. You're going to see that a lot of institutional investors are going to step in massively, you know, massively. A lot of people are going to feel a lot of pressure to go back in the market and buy. I mean, just imagine if you were advised during the crisis to sell everything and to run into defensive or to run into European stocks and everything and abandon everything you have on the US market. You know, what do? You panic buy and you panic come back in the market. All the sellers have sold in the market during the crash. So now what is left in the market is panic buyers and those who have hold really firm into the investment. So that means the only way the market has to go is up because there is no more sellers. Very easy to understand. Very easy to understand. All the sellers already panic sold and already sold everything, liquidated all their position. And so a lot of them are out of the market for many, many years because they've been hurt. They didn't withstand the tough time and they don't understand how the market works. You know, then they are losers. Anyway, today the Nasdaq is up 152%. VIX definitely on the upper band of the range at around 70. Positive divergence with the RSI and the markets. I mean, slightly on the upper end of the upper limit of the Bollinger Bands, but you know, let's see what the market will do in the coming weeks. But we are very, very close to all-time high. Only 5% from all-time high for the QQQ. Personally, because I DCA'd and I topped up during the crisis, so I'm actually above the break-even on my QQQ investment. So I'm already into profit. So let's go into SPY. SPY, the same huge V-shaped recovery, and then you also break out of the above the 200 moving average, and we also on the upper band of the Bollinger Bands, and the RSI is also definitely on the 70 limit. It's definitely bullish. The volume has been quite decent as well. Nothing really negative to talk about the market today, and we are going to see that the inflation number are actually part of the reason the market is very optimistic right now. So if we talk about TLT, not moving much, you see? Actually went to 90, now go back to 85. Again, testing the lower band of the TLT limit at 85. So what does that mean is that the price go down because the market believe that the Fed is not gonna cut rate, you know? The Fed believe that the market believe the Fed not gonna cut rate, whether it's politically motivated, whether it's economically motivated. That's what the bond market is telling us. So those who have been playing TLT, you know, this is a very, very funny game, you know, with this TLT. Anyway, the VIX continue its way down, but slowly moving 1% down today. Now we are at about 18. We are back to the below the 200 moving average of the VIX. And now we are back to the normal level of about 18, 15. I think if the VIX not go back to 15, what I'm going to do, I'm going to buy leaps options on the VIX to hedge my portfolio in case the volatility creep back in the market again. Is a very cheap hedge. If you buy the lower band of the VIX, then there is no much risk. It go much lower than 15, and you can actually buy long dated VIX. You know, that's a good strategy to hedge your position. When it comes to the Max 7 up today 2.23%. Also massive V-shaped recovery. We are still down from the Max 7 from the high of the market, all-time high. We are more or less 12% to all-time high. And to me, there will be no doubt that we're going to go and reach all-time high with Max 7. And again, if you actually were savvy enough to buy when the market was at the lowest point, then like me, I've doubled my position on Max 7 and I'm actually back to positive territory on the Max 7 position that I have. So, which is pretty good, you know. You can see NVIDIA definitely is anticipating its earning. The market obviously is playing the same game over and over again. Before earning, you see, always the market rally. Before earning, always the market rally. Before earning, always the market rally. And then after the earnings, the price come back down, you know. So it's basically buy the rumor and sell the news. Is it going to be the same play again on NVDA? I think so, you know. This is the usual game they play with NVDA since the May 2024, more than a year already. Anyway, you can see that the overall market is positive. AMD 4% today. Definitely a big recovery in AMD from the lowest point of about $80. Now we are about $112. I told you that I sold some put, so basically I'm massively into profit for my put that I sold. I already closed the position because I made 80% of my money. So when I do 80% of my money on an option, I just close it, you know. And I rolled over to a higher strike price on AMD and sold again some puts. And the last put I sold on AMD is 105, with always a 1 month time horizon. SMCI, huge increase on SMCI today. SMCI close to 16% up today. So let's see if we're going to go above the 200 moving average. Now we are smack into the 200 moving average. If we go up the 200 moving average, then there is a high chance we go back to the $65 marks on SMCI. Other than that, IWM doesn't move at all. IWM is a very, very tricky. It's the same as TLT. It's an interest rate play of the market, but less so than the TLT, but still is an interest rate play. Obviously, it has managed to get out of this trading range, but let's see now if it's going to smack into the 200 moving average at 215. And if it does so, then let's see if it will break above the 200 moving average. Actually, IWM is the only indices on US equity market that doesn't actually break out above the 200 moving average. So again, very, very, very good day. Coinbase, you see 23% up. Palantir, clear breakout. This one I'm not going to FOMO and chase it, you know. This one is just an incredible company, you know. I love Palantir, but I don't dare to invest in such highly valued company, you know. I don't dare to do this, you know. It's not my investment style. But for those who actually dare to do this, then congratulations. So those who bought at the lowest of the tariff crisis, at around 70, now you double your investment at about 130. Congratulations to you if you had the nerves to buy Palantir at 70. Other than that, let's go now straight to the economic calendar. Today we had the CPI number. Excellent number. We don't see anything at all from the tariff creeping up into the inflation number. At least not yet. A lot of people argue that we will see later the impact of inflation into the CPI numbers, but actually I have a lot of doubt because a lot of companies, they didn't really raise price. They took a hit on the margins and on the profit because they were thinking that the tariff will be a short-term policy that Trump is actually implementing because he wants to use it as a power game with China. And actually they were right because you see, already the tariff come back from 145 to 30%. So that's a major decrease. Even though the tariff will not go back to zero, according to Trump, it will stay around 10%, at least at the minimum. The 10% on all imports from China is not an inflationary stance to me, because don't forget that the price they buy from Chinese is extremely small compared to the price they sell to the US consumer. They can buy item from China at $10, they will sell it in the US for $100. But the inflation on the tariff is only on $10, not on the $100. That's what a lot of people forget. They believe that inflation will impact the price that companies are selling in the US. So if you have a pair of Nike that costs $10 to import from China and they sell $100 on the shelf, or do you want even a 30% tariff impact your final price so much? They will not. They will absorb the shock into the margin and that's it. So if they go from $10 with 30%, that's mean from $10 to $13. What impact? It's only $3 impact on a pair of shoes that cost $100. You know what I mean? It's not nothing. You know, they will absorb the shock for the short term that they play this game of tariff because they know it's a short term play. Anyway, core inflation rate month over month 0.2, expected 0.3%. Core inflation rate year over year is 2.8 from 2.8 expected. Inflation rate month over month 0.2%, 0.3% expected. Inflation rate year over year is 2.3% on 2.4% expected. And this is where actually Jerome Powell is wrong on his interest rate policy. With an inflation of 2.3%, GDP rate contracting the last quarter, and with employment being so strong, there is room to decrease 25 basis points at least on the policy rate. I don't know what he is playing for, what game is he is playing politically, but definitely there is ample room to decrease rate of at least 25 basis points, at least to give a signal to the market. And that's probably what Jerome Powell doesn't want to give to the market, the strong bullish signal to buy equity, because it will favor Trump. And again, my view, although that he was appointed by Trump, that he is an anti-Trump guy, you know. Anyway, a lot of people are being clouded in the judgment because they don't like Trump. Like all these fund managers and advisors and private bankers who are actually Trump haters, and they actually were coming on TV and saying, yeah, this is the end of US equity, this is the end of the US dollar, this is the end of America, or buy America. No, everybody is going to disinvest from the US and so on and so on. Look, all the money come back, the trillions and trillions and trillions and trillions of dollars that left the US during the tariff war just came back, you know, the whole thing came back. I'm not saying the other, I know, are they actually coming on TV, say exactly the opposite as they've been saying for the last two months? Of course not. They are raging that they were wrong, you know. Anyway, me, I don't care. My money is what I care about. But it's just that you have to understand what political game these people are playing. Anyway, now if we go back to the headlines, there is a lot of good news with the trade deals with Trump and Saudi Arabia of 600 billion. There is a lot of good news on tariff as well. Stock erased 2025 drop as Nvidia power tech rally. Now you see stock is back positive in 2025, according to the news. But let's see if it's true, because I doubt about it, you know. Let's see. Let's see if we are back to positive territory for the SP 500. Year to date, no, minus 0.43%. It's just slightly break even. And on the QQQ, year to date, positive year to date. So now we are back to positive return territory on the year to date for the QQQ. And IWM, still 6% down. So you see, already back. We can forget the market drop of 25, 30%, depending on the index you are looking at. We are all back positive now. You see, just a couple of weeks, it's all forgotten. The market is like that, you know. Okay, still a lot of people, Trump tariff flip-flop, keep stock market forecasters swinging. Hedge funds insiders sees dollar routes as biggest player, I exit. I don't believe so. The hedge funds, they have been selling US equity, and now they are underperforming. They have been underperforming for a long time. I don't know why these people are paid so much money for always being behind the curve. Only a very handful of hedge funds are doing better than the market. So why do you want to invest and paying these high fees for people who don't outperform the market? Buy the S&P 500, you know. You have much better return. So other than that, all the news from the market are quite good. So tomorrow, what do we expect? Nothing really on the economic numbers front. It's only on Thursday that we have jobless claim, core PPI, initial jobless claim, some employment numbers, retail sales. I mean, Thursday is a big day for economic numbers, and that's it. So again, this is an excellent day for the markets. The rally continue, the recovery will continue. Now we are back to positive territory for 2025. Very good news, very good milestone, and we should all be sure that the end of 2025 will be positive and a good year. Let's wait Nvidia earnings at the end of this month. You will see the market will love it, you know. The AI trade is definitely not over. Don't listen to all the fearmongers on MSNBC, CBC or whatever, Bloomberg or whatever, you know, let them talk, you know. Maybe they want to scare you to buy your stock cheaper. Just trust the long-term theme of AI. It's not over. It's going to carry on for 1 decade or two, you know. And those who believe that this is a massive change in the market on the technological front, economical front, and those who actually think that the US is not the best place to take advantage of these changes and think that the Europeans are in a better place, then I think they should really revisit their stance, and the theory, because we are nowhere close to what the US is doing in Europe. Anyway, thanks so much for watching. Subscribe, like, and leave a comment if you want to support the channel, and I talk to you tomorrow. Bye.